Shankar, what's going on? I mean, are we just beginning to align ourselves with the globe? Because, like I just pointed out, on a year to date basis, we're down only 1.5%, 2.5 odd percent.
So why are you calling this the madness, and why were you not calling the listings of low quality companies at crazy valuations the real madness?
I did.
Sometimes we lose our compass, right? So that was the madness. This is a correction of that madness. So I would be very hesitant in calling this particular phase the madness part.
But
That was crazy. This is very sane. So you correctly pointed out, Aisha, that the headline index has not suffered much damage, right? So that's like whatever 1-2% down for the year, is down from the highs, but not down for the year much. But if you see let's say the insane part of the market, that's been crushed, and that continues getting crushed as we speak. On the ticker, we can see that. And that is where the real pain lies. So if you are in generally well-chosen companies, you will suffer losses. There's no debate. Nobody can escape. I'm suffering losses in my portfolio. Everybody will. I mean, we accept it as part and parcel. But it is where you have a wipeout risk if something falls 80%, 90%. That's where the real, that's what will really hurt. A 30-40% fall, we always should be prepared for. And that's exactly what we are seeing right now.
sure, I completely get your point. And indeed, the first crazy factor for the market was the new age tech sell-off. I don't know whether they were aligning themselves with the NASDAQ fall or whether they were collapsing under their own froth or weight. But that surely triggered the underperformance for the market. Now, of course, there's Ukraine and Russia, and tomorrow perhaps it's going to be a rate hike. I don't know what reason is going to follow next for the market. But Shankar, at a time like this, what should an investor do? Do you buy the fall just yet? Or do you keep your shopping list ready? Do you wait for another 10% correction, given that at an index level we've not fallen too much?
So I'm generally not a believer in averaging down. So if I have bought something at 100 and it is down to 85 or 90, I will not buy the stock. I mean, that's my philosophy. Many people work differently, and everybody has a different method and a process, and I have no argument with that. My process simply does not allow me to buy more at lower prices. So that is, broadly speaking, my strategy. Or even if I have to deviate from the strategy, then the additions to the original position at 100. So let's say if I have 100 shares at 100, I will buy only 5 or 10 shares at 80. At the highest, if at all I will buy anything. Because, these things can become very, very extended, much beyond what like both bull markets can extend beyond logic. Bear markets can also, extend beyond logic. And I have no desire to stand in the middle of a big trend, either on the way up or the way down, and try to be extra brave. There is no marks in in investing for being extra brave. You just need to be, just about averagely brave to make money. Don't need to be bearing your chest and saying, okay, bring it on, I will take it on my chest. So that's not at least my philosophy. So stay put. There are stocks getting more and more attractive. As long as the fundamentals hold, they will become good buys once the dust settles down.
Okay, so just to go back to the basics, you've talked a little bit about it, but for all the viewers who are tuning in and they're just seeing this red across the screen, Shankar, commodity prices, the way they're going up, they're not able to understand what they should do. They're obviously scared. You're saying they shouldn't be scared, but they are jittery, they are nervous. What's your advice to them? Because you've gone through so many cycles.
So a lot of the investors who will be really panicking at this stage will be obviously investors who entered in the last 2.5 years, right? I mean, that's or maybe 2 years. I think for them, this is anyway a good classroom lesson. I mean, if nothing else, they should take away from this some very, very valuable lessons, and which is what I tweeted a while back, that bull markets are very high on earning and very low on learning, while exactly the opposite of that is a bear market where we have no earning, but we have tons of learning. So, take this as a good time to go back to the basics, go back to, I mean, I can tell you my journey in this briefly, and which is that I've made mistakes. We all make mistakes. That's inevitable. But I have always gone back, sat down with my computer, with my data, and like, यार मैं क्यों गलत हुआ? मैं कहाँ wrong था? I have never blamed the market. I've never blamed the guy who gave me the tip. Never, ever. Don't get into that mode of blaming the market or something is wrong or Russia, China. कुछ ना कुछ तो होता ही रहेगा. The trick is to blame yourself in a healthy way. Go back to the drawing board. Become a good student again instead of thinking you know it all. In the last 6 months, I've met so many young people, 25, 28, 29, 30, who have come and told me amazing things about investing, which at the back of my mind, I was smiling that, let one bear market come and then we will see. And we have it right here. It's a great learning opportunity. So welcome it. Don't feel bad about it.
And as we get micros and try to shut out all the macro news, what we are seeing also is, year to date, Nifty, Sensex along the flat line. You're seeing far more pain, right, in the small caps and mid caps. Shankar Sharma, I ask you this question because in the past you have said this, right, that the sizzle is in the small caps, not the index because of their composition.
So what sizzles also burns, right? I mean, that is the way the burger works, right? So yeah, there is going to be heat, there's going to be sizzle, and when the heat is a bit more, it will burn. So if you look at the Sensex, the Nifty, forget about this year. As far as my knowledge goes, they have been flat now from August. That's what I was looking at it briefly. They've done nothing while the small cap index went completely ballistic. Now, as I've often said, that what gives you maximum pleasure will give you maximum pain. That's always the fact in investing. Your best stocks will fall the most. And why will they fall the most? Because they ran up the most. A lever is not going to fall to 1,000 rupees, or a HDFC Bank, I really doubt if it's going to go to 500 rupees because it never went up in the first place in this entire 2-year bull market, right? So those places, you were hurting on the way up if you had them because they never did anything. Now, the places where you made money will hurt you the most. So this is a game of endless joy and pain back to back continuously. So for all the youngsters, this is a great laboratory, learning. Just absorb every bit of learning that is coming out of the market right now.
Shankar, hi there. Good morning. Avan joining in. And as part of those learnings, you still continue to stick to your guns, that you're not going to take any blind, crazy risks as you've described it in some of the recent tech listings. That continues to hold true even in a market like this, especially?
Yeah, absolutely, Abha. I mean, thanks. Again, the insanity is not that they have halved. The insanity is that how they ran up in terms of pre-IPO valuations and post-IPO valuations. And this is only a normalization of that insanity. It feels very, very bizarre, but I think, I'm not picking any names here, but from their peak, many of them will be and should be down 80-90%. Right now, most of them are down 50, which means they can halve from here and perhaps halve again to hit the 90% down level. And why not? Most of them have revenues of, like 1,000, 2,000 crores. At most, why will you pay 50 times, 25 times revenues? For what? What is so valuable about these companies? And again, everybody tom-toms their data and this, that, and all that. And I've been on the Swiggy platform and Zomato platform as a consumer. I've ordered on them. Thankfully, I'm not on Nykaa because I don't order lipstick for myself. I'm saying, what is the big deal? I don't care, whether I order something from Nykaa, something from Zomato or from Swiggy. And what is the value of what I'm giving them by way of my ordering pattern? I don't think Zomato can make anything out of my ordering pattern. एक दिन मैं पिज्जा खाता हूँ, एक दिन मैं hummus खाता हूँ, एक दिन मैं कुछ कबाब खाता हूँ. उसका क्या meaning है इस सब चीज का? So this we made into a big deal that they have my data and they can use this and use that. All nonsense. So that nonsense got overpriced. The nonsense will get priced normally. 2,000 crores, 3,000 crores of revenue should be priced, in my view, at the highest, even if you're generous, at maximum 10,000 crores. Tops, 3x revenue. उसके ऊपर का तो कोई चांस ही नहीं है. Now, if you look at the number, they're still 40, 50, 60, 70,000 crores. You can do the math where they should be ideally trading at in a sane market. I don't have to say much beyond that.